indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hey everybody, happy Tuesday. Welcome back to the session. Looking at the SPX this morning, just had a little daily strangle workout for about 60 cents credit. We just popped up here with a gap up. We're just hanging out here for the first 37 minutes of trading. Was enough to take out enough to hit my 15% take profit. I want to zoom out for a moment here and have a look. I just got a copper trade filled this morning as well. Let me add this into my chart. 3.2 is my naked put, and then 2.5 is my long put. So this is a -3 and a +6. So this would be a 10/28 expiration. I should put that at the top. So I just got that trade filled this morning. I think it was October 28th. Let me double check that. So that's already down. So 70, 80 cents credit on the SPX. If I go to copper HG right here, October 28th. Yep. So I've got 3 at the 3.2. Those are the sell puts, and then 6 longs at 2.5 to hedge, lower the buying power, and should help me grab it about $250 of credit, or $250 profit around the end of October. So 3.2 is down here into what I think is pretty solid support right in here. So I'll be looking to, if my position is threatened, I have the long put for a hedge, and I could also roll out my naked put for additional credit. I think right now, looking at the NQ, which is my futures feed for the NASDAQ, I'll just go to this chart here. We're trading at 18,907. I need to see if this will stay below 19.1 by the end of the month, and I'm wondering if I could put on like a 17,000 hedge right now for additional credit. See if the bottom is in. Let me go to NQ here and see what that's trading for. So if I went out to the other expirations that I have, I think it's the end of the month. NQ, August 30th. So I do have a hedge in there. I could probably put in another 1, get some credit at 17. So let's see, NQ there, and then out to October. Those are already hedged. It's this one at the end of the month. I'm gonna see if I can get a 17,000. August 30th, 17,000. So it does give me some credit. I do want to probably add a little bit more. That low is 17.3. I go to 17,000. So we'd have to drop in 2 weeks. We would have to drop around 10% more on the NASDAQ. I think that trade's pretty safe. Profit-wise, 42.75 credit. I'm probably going to buy something against that. So if I did a 1, I've got this out of the money hedge right there. Choices. What's the buy power reduction if I throw it on there? 2,300. It's not bad. I think I'm going to take this trade. So 17,000. That's a 7 delta. That's quite a bit lower. I'm going to go to a 5 delta just to see what the credit is. 16. So $600. $600. That's out of the way. 16.7. That's fine. We're slightly higher in the IV. I'm going to take that trade there for $31. End of August. That's pretty good credit. Throwing a little extra gravy there. All right, and that's only tying up about $630, which isn't too bad. Let me double check this on my IRA accounts, and then we'll get to some charts and analysis this morning. So that one needs to be hedged more. think I did this one just on the margin accounts. So I'll do 1, 2, let's check these. So $600 and 600. Okay, I'm going to take that trade. So 30.50, 31.25 mid. I'm just looking at it. I'm going to see if I get $31. $31 there. Not filling. Okay, let's try 30.50 perhaps. Rejected. Love it when it does that. Try that again. 16. I did it at a 5 delta. 16.7. 16.750. Okay, I'll do the 16.7. Try to get $30 for it. Don't reject my order. 29.75. All right. Similar. 9732. Okay, getting filled there. 911. Filled there. And 151 filled there, hopefully. Okay, so 29.75, just one contract. 29.75 times 50, so that's 14.87 on the naked put. And so I'm just going to put a little hedge against that just to be a little bit safer. So my position right now, I still have this 12,000. That's a 1 delta long put that should help make up for any type of move. I can roll this too. I don't think we're coming back to 16.7 by the end of the month. We'd have to have another hefty dump to the downside. So if we come down to 16.7, that would be we'd have to have a 12% drop by the end of the month to get there. So that would give us how many weeks of trading? About 2 full weeks of trading, and we'd have to drop 11%. So I think what I'll do is I'll keep the 12,000 put, which is way out of the money. If we have a big drop, that's okay, because that 12,000 should be doable. But that'll help me generate about $1,400. I did that on 4 accounts, so 1475 4 accounts, about 6 grand. And I think that's looking pretty good. So we had good PPI numbers today. I think the market loved it. Came in softer by a decent amount. We have CPI tomorrow. I said this earlier in the week. I think the CPI print is intentionally higher because what I've seen on the Fed websites is we're looking at like 2.7, 2.74 for the year-over-year print. So I mean, I'm not saying that it's tomorrow's news today, but I wouldn't be surprised if we come in better than expected as far as lower CPI prints for tomorrow. So I think the market's going to like it, but we're also pulling back so aggressively that I also wonder if this market is going to, be kind of satisfied at the equilibrium point. So SPX again, like gapping up, or the SPY gapping up. I mean, all the nonsense that happened over the last couple of weeks. So we're pulling right back to that 50%, right? So if we start to turn over a little bit, you look at the Nikkei as well. I mean, all these things are lining up for it's either going to be like a choppy kind of buzzsaw where there's no real winner. Bulls and bears are fighting back and forth, or the bulls have just kind of gotten themselves out of trouble because they were super long, get smacked in the mouth a little bit, and then they're allowed to kind of get out of trouble, and then the bears are like, okay, it's our turn now. Although, and this would be very counterintuitive, but if inflation comes in lower than expected, you got to wonder like how aggressive this continues to rip. And I do think that if we end up sniffing these all-time highs soon, that's not a good sign. Like I don't know. That's my intuition. Like if we just have one ridiculous volatility event and we come right back up to those highs, part of me wants to sell this thing like during the election or maybe by the end of the year, and just trying to fade that move because I think that this type of volatility event, if we go down 10% and up a 10 or 11% to get back to the highs, I think we're just looking at a ton of volatility, and that's going to be wild, right? So I do think this is likely going to turn over to the downside, at least having a VIX move up. I mean, we've gotten below 20. This is one of the largest declines from this type of volatility spike, one of the largest declines we've seen ever. So crazy outliers from last week on Sunday, Monday, and what happened the rest of the week. Um, and we'll see how it settles in. But I wouldn't be surprised if we see the VIX head up towards, high 20s or 30s again. And we'll see what that looks like. Is that going to be on CPI data? Is going to be on Jackson Hole, which is the 22nd? 22nd through the 24th. So that's a Thursday through Saturday. So I don't know. Just monitoring. I'm debating right now. It's like I've got this naked put in. I think what I might do, or not naked put. I've got the naked put, but I want to look at it maybe another hedge. So I've got a long put here that's probably worthless. I did pay for that. I'm still looking at net profit. I'm trying to get this thing to trap the 19.2 by 19.1 is a trap for $5,000 as long as we stay below 19.1 by the end of the month. So I do like that trade. If I could combo that, that would be a nice little combo. Or if I keep the put running. We'd have to drop, like I said, 11% for that trade to be threatened. And I keep this 19.1 level. It's like that's 5K in profit if we stay below that, plus the 1475 I just collected. So by the end of the month, per account, that could be a nice little jump of about $6,500. So I don't mind that. But like I said, let me get back to the charts. I do think that volatility is going to end up, poking its head back up a little bit. Maybe we rise into the high 20s or maybe 30s. We start getting into the 40s again. It gets a little bit dicey out there. But the good thing is data's coming back. I keep looking at the Nikkei overnight. Nikkei is up again. We've successfully, closed above the 382. So for right now, this tells me that we're likely still heading back into this 5.0, this 5.0 pullback zone. But this is definitely the one to be watching. And I know there's some correlation here. It's global, but what happened with the yen just over the last few weeks when we topped out here in July, the Nikkei is going to be a big contributor to whether or not we still see risk on trading around the globe, certainly in the U.S. So if the Nikkei is above the 382, you can see pretty clearly like there's strong support in here right around this supply pocket. So there's strong support right in here that could become resistance, and there's inefficiencies right with this current spot. So if we drift up a little bit higher, that's a 5.0 pullback, that's equilibrium. I don't necessarily think the thing just, hits this level and just dumps to the downside. I don't think that's really the play. I could see, we hit this level, we find some intermediate resistance. And if we do get on the right-hand side of the trend line, it looks a little bit more vulnerable that the bears might make an attempt, right? They might make an attempt to push this lower, but all it may do is push it to a higher low, and then we're back in recovery mode. So this has been so fast that it's kind of hard to get a sense of structure here. Like I'd be watching, we put in a nice low right around this 33.8 level, right in here. So if we get back to this like 50% zone and we sell off, I would look to see if this level holds to then turn back up. So we'd have a low to high, pullback, and then a higher low to higher high, and we come back into where this whole thing started its decline. I don't think that all-time highs are coming anytime soon. As a potential trade on the Nikkei, I wouldn't mind getting something off the lows, but nothing yet. So, all right, still expecting the NAS and SPX to test the 200 EMA. I mean, yes, in a way. Let's take a look at those really quickly. Let me bring up this other workspace that I have and make this slightly easier. So this harmonics and pivots one right here. So here's the NQ. The NASDAQ did hit the 200. It was the SPX and the SPY, anything that's S&P related. So on a positive side, on the daily time frame, we came to the 50, the 100, the 144. We don't have a crazy extreme on the 200 EMA, but because we did break back below, right? I mean, we broke below the 50, and right now we're kind of testing the 50 again. So I do see this quite a bit where we, break down, retest, and then we settle back in to the low, test that 200 EMA, and then perhaps this is a, bit of a chop zone for a while before the market can kind of justify trying to get back to these highs. Again, there's a lot of ways that I can splice this up and say this is what I think is going to happen, but let's just keep it really simple, right? If I go high to low, and it pulls back halfway, if this market is not done with this bottom, then we're probably going to come back and try to have a retest of either halfway down or all the way down to retest the low and find that 200 EMA. Look, if I have an opportunity to buy this thing at the 200 EMA, I would take a stab there. Dollar cost average my way even lower if I needed it to be. But if we're going to go from this high of the year to this aggressive pullback, and this just gives us a chance to buy low and then see the market revisit the highs, I mean, that's a good trade. That's an 11% move. On an index, that's pretty good because there's going to be individual stocks if you can find them, and maybe it's the top 10 that we know and love, and not everything else. But it's still a chance to get a nice little gain. And obviously, if we're using options or using futures, and we get the same type of run, those leverage instruments can allow you to make bigger gains than just the 11% you get on the index. Okay. More influential CPI figure year over year. I think year over year is more influential. Yeah, the year over year is what everyone's watching. And realistically, if you want to look at like the Fed inflation measures, okay, I'm going to put them in priority. One is going to be the PCE, which we don't have this week. Okay, that is what the Fed is primarily using for inflation. And then I would go CPI year over year, and then I would do PPI year over year. And how are they trending? Okay, so this week we have PPI, which came in softer than expected, which the market's liking right now. We gapped higher. We're just kind of hanging there for the day with a slight gap up. I mean, I'm looking at the SPY, 533 to a gap up of 537 or so. That's pretty decent. That's a pretty good gap. But if we come back into that halfway point, I mean, this happens all the time with price action. We go high to low with the big flush. We pull back to equilibrium, and then the market comes back to retest. Right? Is it going to be that easy? Not necessarily, because this market is built with positive drift. So, I mean, I could see volatility spiking up, but what right now is going to cause the downward move, right? I mean, unless the Nikkei is going to have a terrible night and we're going to see currency strength, where if you look at currency strength here, okay, if you see the Japanese yen is up on top and the Swiss yen is up on top, sure, it's looking bad for that day of trading. But if the Japanese yen or the Nikkei, or I'm sorry, the Japanese yen, the Swiss, and the dollar for that matter, if we have the zero line, if below the zero line you have Japanese yen down here, you've got Swiss down here, and you have dollar down here, that's a risk-on trade. And these indexes will continue to climb and kind of climb the stairs back up. But like I said, 50% zone, that's a good spot for the bulls to get out of trouble. That's a good spot for the bears to come in and maybe defend. And we'll see if it tips over a little bit. Maybe we have, I mean, for crying out loud, we can have one day of selling. I just think everyone right now is so fresh off of these scares that one day of selling is going to feel like, oh my gosh, it's going to be a bear market again. I mean, so if this is the Nikkei, but if we go up into this level and we sell off for a day or two, is everyone right back on board? Like, deleverage, get rid of your, it's like dump everything. It's not really the case. Same thing on the S&P and the NASDAQ. If we just turn over, if I go to the SPX here, I mean, we're right back into that supply zone. So right back here, we're hitting it. If we're looking at a trend line, it doesn't have to be insanely complicated. If I just open up my editor here, let me find my charts. Okay, so I've been watching this since last week. Once we started this is ES, this is SPY, and that's SPX. And guess where we are right now? We're in that yellow zone. Okay. So to me, this is where price finds equilibrium. If we're looking for a short-term rejection, that's where we turn. If you are a bear right now, okay, if you want to sell this market, I understand. I mean, it makes sense if you want to look to sell. The problem is, I wouldn't sell this thing without having some type of confirmation. I wouldn't sell this thing unless we have, price back below the VWAP on the daily and weekly. So I'm not a seller right now. This morning was a nice little short-term strangle. If we get back below for the week of trading, if we get back below the VWAP and then we look for a push lower, that's fine. I'll look at a 0 DTE or something by the end of the week, but I don't have any levels that I really love right now. The one that stuck out this morning was before we had the market opening, we had this 538 and we gapped up to it, and we're probably going to sniff it out this morning. So if we hit 538, that's already a pretty decent move on the day. That's up nearly, $4.50, which is just shy of 1%, which is normal. I mean, most of the time the markets are moving less than 1% as far as the distribution goes. So I could see us just kind of hanging out for the day. But if we leave a gap like this and somehow tomorrow the news is taken differently, maybe we fill the gap tomorrow on CPI. I'm not sure, but we've got some call option sentiment that's leading the way this morning. I see more to the upside than I do the downside. So I think that after we have a little push up, it's just hanging in there. Okay. So watching closely. If I'm going to be a seller, I'm not trying to call the top here. I would say watch your structure. If you go down to a smaller time frame, okay, this is the low right in here. Speaking of, I think what I might end up doing, let me do one more thing here. So on my SPX trade, got a couple more in here. So I've got that put. This one for ES September. Let's see. Could I get a decent trade in for September? Let's find out. Or not September, for August. And I go something end of the month and see. It's going to be short term, but I'm going to see if I can construct the trade here. So ES trade out to the end of August. So if I go August 30th, could I put in a trade here with a little bit of a trap? And how low could I put my put? I could put a 5. I like this trade with higher IV. I'm going to take this trade. This will be another kind of bear trap trade. Frank, if you're watching, this is a trade I was talking about yesterday. But I'm going to put in. It just depends on how it's set up. So I'm not going long futures here. I'm going to actually do a futures options trade. But if I put in, we're currently trading at 5,400. I'm going to look at a 25. So 5260 on ES. I'm going to try to go 50 points wide there. So that's a $2,500 profit trap if I get it. And then on top of that debit spread, I could go a little bit wider, 5260 to 5160. That goes 100 points wide. Now that's a profit trap of $5,000. Where would that start at? Let me see what that starting point is. That starting point would be 5260. So 5260 is down here. So 5260 right in here. If we get below that, that'd be my 5K profit trap. And if we revisit the lows, that's fine, but I put my naked put all the way down lower. So let me see how this trade is constructed, see what the credit situation looks like. So if I do 5260 by 5160, that's 100 points wide. That would be, get rid of this trade. Let me just clear this out. So 5260 by 5160. So 1450 in debit. But that is mostly, 42.75 max profit for the debit that I pay. So if I add into this a low delta, which I can go below right now, I can go below. So 1450. Here's the choice. Do I go? If I doubled up on that one, that's not good enough. I'd have to go like 49. Even that's not good enough. I don't have enough time in the trade to get the premium that I want. So what I was thinking, if I did the debit spread here, and maybe I can move these down slightly. Actually, you know what? I'm just going to clear the trade. Put in, let's go to a 5 delta. And then put in a 1 delta. That's $300. So if I do 2 contracts here, that's 670 for ES. And if I add in a inexpensive put, I think these are all kind of pricey at this point. I don't know. I don't love it. I think it's just easier to go out farther and trying to do something like short term. And NQ has a little bit more volatility and premium. So anyway, let's go back to the chart. Take a look at this. Right. So connect the lows. That's your trend line that the bears would have to break, right? If we get this low, and we're coming back into this resistance. This is support becoming resistance. It's right there. This is kind of the equilibrium trade that we talked about. If we are getting price action below this level, take out these recent lows around 53.30 or so. These lows around 53.30. We take out those lows, then sure, if we're down here below the lows, it looks like we could have another thrust to the downside. Like I said, if we're below the daily and the weekly VWAP, then maybe I bias myself a little bit to the downside for a sell-off that gets the VIX higher. Kind of bracing for that, but not getting like overexposed. Okay. So anyway, this is what I'm going to watch on the SPX. This is a 15-minute time frame, but I'm taking in that low from Monday's open last week, and we have been clawing our way back. So I'm not bearish. Okay. I think if we're going to get bearish, it makes sense that we could try to guess here to get a good entry, but I wouldn't feel comfortable saying that today's my expiration. Even Friday's my expiration. Realistically, the trade that I took yesterday, and I did this with Frank, we talked about a volatility play. I looked at this as if I were to buy a call and buy a put and sell a call and sell a put, it's given me about $25 of profit on the upside and about $30 of profit on the downside for a trade that cost me about $16 to place. And I did this out to the end of September. So 9/30 expiration, I don't have to be perfect on this trade. If the S&P wants to go up and get me by, even if I go up $20 or so, I make money on this trade. I turn a $16 debit into a $20 credit, make $4 net. That's fine. Profit target wise, let's say I go after like a 15% take profit. So if I'm at 16, it was like 1640 was my fill. So 1640 times, let's go 15%. I'd make $246 a contract if I just hit a 15% take profit. So I need price to trade around $18 or $19. Okay. So I have this trade running on the SPY right here. It should be down here in my platform. So SPY, September 30th. So I've got 1, 2, 3, 4. So I have the 537 by 557 give me $20 of profit to the upside, and then the 535 by 503, $32 to the downside. That trade cost me $16.40 yesterday, is trading for $16.40 and change today. So it's break even right now. I've got time, I've got direction, and I'm going to see what volatility wants to do. I'll be watching prices. I've got my levels on the SPY. I talked about this yesterday. So at 537, I'm gonna put a break even at 553. So let me set a chart alarm. So 553 would be a break even. 553 is a reverse iron condor break even. And on the downside from 535, I believe, 535, so 519 or lower. So move this one up to 519. And 519 is going to be reverse iron condor break even. And I'll manage those trades. So if this is, inching higher to test this sell-off point from Thursday last week. Again, a lot of stuff has happened over the last couple of weeks. This was FOMC with Jerome Powell's press conference. Thursday, the market took it all back. Friday, the market got worse on non-farm payroll. Sunday to Monday, the market just dumped. There's your freak out point. There's your volatility event. And so we're riding the ship so far. But as you can see the same chart that I see, it would make sense to me technically that this level holds for resistance. And if this level holds and we have one nasty spill to the downside, that could be enough to topple this thing over and at least pull back a little bit, maybe come back and retest that low. But what I keep going back to is what is the data? What is the catalyst? What is the driver that might be influencing that move? If inflation data is coming in like as expected or in line with what the market likes, which would be softer inflation, then we're going to see if this Fed decision changes in September, right? I mean, the Fed decision for September is still seesawing on this 50 basis points or 25 basis points cut. So here it is, slightly favored at a 50 basis points cut for September 18th. There's nothing that the Fed has said that they're going to do 50 basis points. There isn't. I think this is just my opinion, but I think the best path forward for the Fed is to do what they say, stick to the 25 basis points, and do 25, 25, and 25, and just let the data come in. I think any type of like give in that the Fed has, which is like they'll go more aggressive, they'll do 50 basis points or another 50 basis points. I think that shows that they're cutting on the verge of a recession. Because I don't think making cuts deeper and faster is necessarily going to give the market confidence. I think cutting as is and letting the data come in as it's supposed to, and hopefully the data, of course. I mean, this is like, look, I think the Fed is just like crossing their fingers like everybody else. At this point where it's like we dodged a bullet on Monday's open, considering it was such a nasty flush down, and we've been ripping from there. That is the market giving everybody a taste of what could happen in a high volatility environment. And so if we're coming back to equilibrium, I think that gives everyone a chance to just play defense, not lose their butts, and figure out what to do next. And so mechanically, how can you kind of trade through that? Look, I'm not all bullish. I'm not all bearish. I think it's going to be time to see the market where, the bulls have had some fun. They've ripped up here to these past levels. I can see the market chopping around in here. I could see this trend line being what we have to pay attention to. Look, there might not be a lot of anything that happens. Not every day do we come to the market and just see like 1%, 2% rips every single day. It doesn't happen. Most of the distribution in the S&P and most of the distribution in these markets are less than 1% a day. Like 70% of the time, you're getting less than 1% moves. So even with high volatility, that's still elevated. The VIX is still at 20. We're at 13 a month ago. So it's still elevated, but I just think a little period of some chop is appropriate. And go back to what the market does most of the time. Most of the time, it doesn't move more than 1%. So anyway, that's where we're at. All right. So if I go through my kind of top down, we've got to watch some levels very carefully. Here's the SPY. Same thing on the SPX. I've got the trend line already set on the SPX. But SPY, SPX, same type of thing. Here is a trend line to just tag the low right there. If we break that trend line and roll over, like I said, on the VWAP situation, this darker blue line is a weekly VWAP. And so right now in the futures feed, if we're below that, I would look for futures to head lower and possibly look at, if the SPY is going to gap down or the SPX is going to fall. I'd like to see a directional day that I could put in like a long put. One of my favorite trades, if I have confirmation, would be if I get this big gamma level, down here, and we're below VWAP for the day or for the week, to put an out of the money put that, let's say, I don't know, I'm just looking at a price point here. If this is the SPY and it's a 536 and I do a 530, so let's say we're at 536 on the SPY. If I buy a 530 and I go out maybe 3 to 5 days, that trade might cost me like $2, but it has the potential to trade at $5, $6, $7. So the upside potential is pretty solid, which I like. And so if I find an opportunity like that, I'm way more inclined to do that for a 2 to 3 day expiration kind of during the week. If I don't know, I kind of like the trade. I should have already been in the trade, but I'm like, what else do we have for today? I don't want to fade this and say like, I'll just put a bear call spread in, because we could still drift higher on the day directionally. I think 539 on the SPY is doable. 540 is a round number. So I don't necessarily want to put in a bear call spread, and I don't want to put in a bull put spread. I'm just going to stand aside for right now. I just don't have a good trade that I like kind of intraday. But my intraday trade was actually early on. I took it right around opening bell, and by 9:58 I was profitable. So that was this trade right here. If I go back to the SPX, so the trade filled for $4.10 and is trading at $2.55. So I've already taken out about $1.50 of premium, and all I needed was 61 cents to hit my profit target. So that works fine, because today is doing what? Nothing. Even with a gap higher, price is doing nothing. Those days are perfect. Okay. So does everybody see? Can you pick up what I'm putting down? right? I mean, if we're going to be bearish, I don't think it's like just call the top and go crazy short. I think what we have now is we have a situation where we've clawed back. We're in this equilibrium area, and we're going to see if this structure holds. Okay, the bulls have to make a break for fresh highs. They got a gun for this, Thursday sell-off. The bears would just tip things over on the right side of the trend line and see if this ignites any type of selling. It doesn't have to be crazy, but it's like I want to see if the technicals fall in line. I don't think the VIX is going to spike up to 60 again, but if we go from 65 down to 20 and then back up to 25 or 30, that gets the market a little bit more excited. Probably not in a good way. If you're not hedged, if you're not playing anything to the downside, then it's not going to feel great, right? Long condor for higher volatility. You want to do a long condor or a short? That's what I did. I did the reverse iron condor. I did the long. So I mean, I bought the guts and I sold the wings. If that makes sense to you, right? Like the 537 I bought, the 535 I bought. So that's my call side, that's my put side, and then I sold against that. So I'm looking for that vol. This is what it looks like on a risk graph. It's this. So this is my 537, and this is my 535. I paid those debits, so I mean the debit is here, and as long as we get beyond a certain move, it pays out with $16 one way, pays out with $16 the other way, and I've given myself on the bullish side about $20 of profit and about $32 of profit here. So you might ask, like, well, why'd you go so why isn't it equidistant? Well, because I think on the bullish side, I'm a little bit less of a believer that the market's going to go up 30 to 40 points to the upside. I'm more of a believer that if we're going to have a fast move to one way or the other, I think the fast move is more to the downside than is the upside. The fast move would be down. The upside would be the slow, steady grind. But either way, if I get $20 of credit on either one of these trades, that would be enough to help me take my profit. That's probably, if I get, that'd be $3.60. So 360 divided by 1640. That's a 22% profit target. I'd be happy with that. 15 to 25%. I like those profits for some high probability wins. Okay. All right. I think I beat up the indexes enough here. Just to at a glance, we're up on the SPY, we're up on the Qs for right now, but just watching closely. Here's an easy trend line to set on your Qs. Okay. Same thing here. NDX. Just set your chart alarms. Set your trend line. Set your chart alarms. Keep your eye on price, and that's what I'll be doing here. So we're pulled back right in these equilibrium zones. I'm not a bear. I'm not a bull. I think this is where the market tries to figure it out. If it wants to go higher on CPI tomorrow, fine. It just eats into Thursday's sell-off. That's not a bad thing, right? It makes my NQ trade look even better. But if we roll over tomorrow for any reason, or roll into next week or Jackson Hole, I just have to be ready for maybe an uptick in volatility over the next couple weeks. Okay. Dow. I did look at the Dow. I actually may look at a ratio spread here. Let me see what's going to tie up in capital. Let me go to the daily time frame. So on the DIA, I'm going to try to put in a ratio spread. So I think this one already expired. Let me double check here. I think I've got this trade done for profit already. DIA, I do not have any DIA. So I don't have any Dow right now, but I do like this area of around 365 by 360. Would I take some ownership of the Dow? I would. I would own the DIA. I think there's, the scary part is how aggressive this run was from Q4 of last year. That's a pretty scary run. I don't necessarily think that we're giving back all the profits for the year. I hope that's not the case. I know the Nasdaq took away a huge chunk. I mean, it was up like 26%, dumped 20%. The S&P was up 18%, dumped 10%. So it did take a lot of the profits away for the year for the indexes. So that being said, I mean, if the IV is high enough to get a decent credit here, let me evaluate what I can get out of maybe a 365. Let me check this out. Yeah, I'll do some currencies. I see a pound, yen, euro, dollar. I see them. Just give me, I've got 15, 20 minutes or so. Okay, so Dow trade. Let's get to, this isn't a bad spot here. 66 days out. If I did the 365 by 360, 360. So I can get 225 credit, collect 725 in income. I could take the ownership on this trade. It only ties up about $3,600 in buying power. That's not bad for the shares. So 360 bucks. So with a margin account, that's 18K. I can do this on my margin account. I'm going to try to go after some income here. The 365 by 360 ratio spread, collecting 225 credit. IV's at 36. Not bad. Probability of profits around 95%. That's also pretty good. So this is an income trade that if I took the assignment, I'd take the assignment and I would repair it. Going out 30 days or so, let me see what a covered call is. If I own the shares of the Dow, I go out, let's say 30 to 45 days, and at the money is trading for like $8 or $9. So if I took on shares, I'm going to own the shares at like 350 and change. I'll go out 30 to 45 days, grab another $7 or $8 credit, lower my cost basis on the Dow. I'm going to take the trade. So this October, 66 days out, I'll do the 365 by 360, try to grab some income here. This is going to be better for my margin accounts because there's a little bit more option buying power. So I've got 1, 2, 3 accounts of the 4 margin accounts that I have. So I'll take that trade. Yeah, I'm going to take that trade. So 225. Let's see if we can get filled. The spread's a little bit wide. I would, as long as I can get over $2, I'll still take the trade. As long as I get over $2. The nice thing is if I do take ownership here, so I would get assigned at 360 minus hopefully the 225 credit spread on the ratio spread, and then also a $5 credit on the actual long put. So I'd own the shares at 352, which means that for right now, the Dow all the way down to 352, we'd have to have an 11% drop on the Dow. For number one, I'd have to get assigned. Number two, if I own the shares, we'd be 11% lower. I'd be in the category of, or the camp of buying it anyway. If we're at 10+% in the Dow, 10, 15, 20% discounts on the Dow, I'm looking to buy it. And that puts me right around 11% from current price. And from the top, that would be around a 15% correction from the all-time highs. Again, makes sense to me. Like the trade, doesn't tie up a bunch of capital. Let's try to get 225 and throw this trade in. So 35, not filling. Let's try to get 2. Oh, fudge. Now I see $2 on the mid. Yikes. Well, that's not cool. Let's see here. Vega's pretty high. Do I need to have that? No, not out that far. 94% chance of profit. All right, I'm going to try to get this filled. I'm going to put a pending order in at 215 and just let it sit. So 215 credit, I'm going to let that sit, and then I'll add this into my other accounts. So we'll go here. Okay. There we go. So let me add that in, and let's start doing some knocking out some currencies. So I have a DIA ratio spread. Expiration is 10/18. I'm doing the 365 buy put, 360 sell put, going after 215 credit pending. Willing to own. And so I would take away the assignment at 360 if I'm assigned, and then minus $5 for the long put, and minus 2.15 for the credit on the trade. That'd be a break even at 352.85. So break even 352.85 to wheel or repair. So a wheel strategy is if you own the shares, you just add covered calls and lower the cost basis and try to get it called away, which I'll try to do that and flip it for maybe, I don't know, maybe $5 a share, $10 a share. Okay. Q's gap fill. Okay. Pushing slightly higher in the SPY. All right. So this trade's done. This trade's done. Those were profit. Now I'm putting in a new one. Then we'll get some other currencies. So 365 by 360 ratio spread. for the 10/18 expiration. So 365 starts me right around there. Okay, let's get some other currencies. So dollar index, we can start there. Okay, so I was telling my traders this morning, I mean, the dollar's dropping a little bit. I'm still not convinced this dollar index is doing much of anything outside of maybe pricing in a rate cut cycle. And to do that, I'd like to see this. If the dollar breaks this low that we had from last week, Monday, okay, if the dollar breaks that low, then we're in some open space to retest 101 and possibly 100. And if it gets really ridiculous where the dollar just gets crushed, then we have a broadening pattern that potentially brings the dollar down into this 18127 extension, which is around 98 to 97. Currency wise, if you're a Forex trader and we break through 101 and 100, what I'd like to see is it's, well, let me zoom in. I don't want to force this trade, but this is what I looked at initially when we had this recovery. If you were going to sell the right-hand side of the trend line, stop loss above this high, you're already starting to get the price looking favorable to the downside. I'm not quite there to think that this is a guaranteed sell-off on the dollar. And the reason I say that is because the dollar's been choppy for several months. August is still a really difficult transition month. And if we see the dollar, for example, come down to the same low again, find this bottom, and then rip back up, it's not ready to make that open break yet. So to me, as a seller of the dollar, we've got to get a nice clean break below 102. And then I'm looking to be more bearish on the dollar. If I sell it at 102, got a target at 101, target at 100, cancel, replace, move your stop loss. I think that's a good basket trade on the dollar. But if we come back into the same low, okay, the same low and bounce, well, there's a tight stop loss for a buyer, and we come back into the same pocket at 104, and this thing is still in this wedge that is not giving us any clear direction. Okay. So I'm not convinced that we have a dollar direction yet, but I will be watching that 102 handle and I will look to see what price action does. Okay. I think if I mean, I'm hoping that we get a direction on the dollar. Those last 3, 4, 5 months have been agonizing to see any type of real direction on the dollar, and I hate every one of those currency pairs. But if we get a nice clean break below 102 and we're looking to go down, okay, cool, because we have a high, low, lower high to lower low and measure symmetry, get it out here into open space. That'd be a great sell-off trade in the dollar, right? The problem is risk-off trading. If we see any type of risk-off trading, the dollar gets stronger. Same thing with the yen, same thing with the Swiss, and this dollar goes nowhere. If we have real risk off trading, then we've got bigger problems ahead where everything looks crappy and the dollar gets stronger. So does the yen, so does the Swiss, and we have a huge risk off event. Is that really what's lining up here? Not necessarily. You know, if the Fed's still going to get lucky and kind of thread the needle on the soft landing scenario, then I could see the dollar getting weaker, more than likely. But to me, I've got to get a nice clean break below 102. So DXY, one chart, pretty much covers all of my pairs except for the dollar yen. The dollar yen, it's its own thing. All the yen crosses are moving pretty similar. So follow your yen basket. You know, what's the yen doing? Well, they all dropped a ton. They're all pulling back towards that 38%. If they get above the 38%, they're probably going to the 50%. There's your equilibrium. And then short term, looking for the yen crosses to make decisions. Okay. The trades that I'm liking right now, I'm long on the Aussie CAD. There's a nice little channel here. Low, low, low. Long on the Aussie CAD to get to channel highs or try to get back to these same highs around 95. So Aussie CAD is one of my favorite trades that has nothing to do with the dollar, nothing to do with the yen, just two nice commodity pairs trying to kind of duke it out with good technicals. New Zealand CAD, same thing. Very similar structure, looking for this to push up. We have RBNZ rate decision tonight. I'd like to see if the New Zealand CAD can get up towards the 8,800. Swiss pairs, I'm still long on the Swiss. So Aussie Swiss is bullish for me. And I've been holding since equal lows here around 56, as well as tons of other positions, but I'm in. Let's see what we're doing today. I've got Owanda accounts running long on Aussie Swiss. I've got an IG account running or Tasty FX running. Let me see where I'm at. Yesterday I was up like $520. I'll see if that's up higher today or flat. I went from like $500 profit to like 250. I'm gonna see if I'm back up in profit today at 500 plus. What's up with NQ? I don't know. We just spent the first 45 minutes talking about all the indexes. So, I mean, this is what I'm watching right now. It's just going higher. I mean, we're pulling right back into that equilibrium zone. So the market likes what we saw today in the news. That's really it. Right? Yet today's news, market liked that we had lower PPI, which means that businesses making things or having things more expensive to them, passing on that to consumer, it's less of that cost getting passed on because it's lower prices coming into businesses. And then tomorrow's CPI is just going to be our year over year. Of course, we have the core CPI, which is minus food and energy, and oil's up like 11% in the last couple weeks, but that's probably not a factor. We'll see what the CPI year over year prints. All right, where's my IG at? There it is. Trade. So I'm back up $380 right now. I'm still letting them run. So take profit on the Aussie Swiss. I'm going to take some profit up here towards these highs. So my position's right there. I'm going to try to take profit back at the same high and then rebuild a position for a bigger swing. Okay, or rebuild all the way back down and trade a range, back up. Maybe this is a range trade. But keeping it long for right now. Okay, so the Swiss pairs, Aussie Swiss, I'm looking for an opportunity if we go from a flash crash low up, a little bit of a pullback here would be nice just to see this thing want to rebuild and then make its way up into the 6,000 highs or 6,100 highs. Okay, CAD Swiss, same thing. CAD Swiss off of flash crash lows. This one I did get filled a couple of times. This one was a slightly bigger drawdown because I was leveled in here, and on a trend line break, I was leveled in here with some stacked orders. I was leveled in here with a buy, and then when this thing dropped, I had a fill pending at 6,000 that didn't get filled. So I did get a trade around 6,150 just to add into it, but now I'm just waiting for either somewhat of aggressive trend line or just wait and see if this is flash crash low. We come up, pull back a little bit, and then get another nudge to the upside. I'm just looking to see if this CAD Swiss will replace these highs or try to retest these highs. So I'm looking long after flash crash. If you've never experienced a flash crash in Forex, typically that is a pretty solid bottom or top to trade. So I'm looking at these as an opportunity to trade the lows, and it's possible that we can, have a higher low. It's possible we can come back and retest the same low. It's possible we can go a little bit lower with divergence, but I'm still looking to build my positions off those lows. Okay, Euro Swiss, same thing. This one to me is a double bottom. So we bounced right off this low. I got filled at that bottom on Euro Swiss. I'm trying to get back to the highs around 99. If this is truly a double bottom, then you measure the move and you project that move up, and this is a move towards 105. That would be an excellent take profit if we're going to hold this level. Now, I'm not going to hold out for dear life to 105. If we get back to 99, I'm taking profit. That's still a pretty good trade. Pound Swiss, I'm in, but I'm holding that one's it's 5% margin, so I'm not doing much of that one. Swiss yen, I'm not trading outside of a swing trade I posted this morning in my trading room. I'm doing a swing trade around this 55% pullback zone, stop loss above the high, and going after a swing to the downside. It's like a 2.5 to 1. If I go to the New Zealand Swiss, this one looking at the same thing. We got the Kiwi rate decision tonight. If it just keeps ripping higher, awesome. I'd love to see it come into that zone. Try to get back to the same high. That's my profit target, 56. I'd like to see this thing get back to 6,000. But to get there, if we go up and then pull back again, I'll kind of reload and then get that symmetry trade towards 6,000. So I'm still, look, this Swiss franc stuff for me might take another 3 to 6 months to have my profits materialize. But I'm willing to hold on to them, get some positive swap, generate some nice gains overall, and go from there. Okay. All right. I covered most. I think somebody asking euro dollar. Look, if I talked about dollar index, that's essentially your euro dollar inverse. So I don't have any good trade on the euro dollar. Even if the euro dollar were to break up here, if it breaks up here, I don't really see that as a breakout trade unless the dollar, if the DXY is less than 102, okay, then sure, the euro dollar looks pretty good for a buy trade. Follow along with what you see. But I need to see that DXY supporting the same evidence. Okay. All right. We're running low on time here for me. Silver and gold, I still like both of them bullish. Gold is trying to retest highs. Be careful on this one. Just don't get a bull trap. I could see gold, poking highs, testing, and then pulling right back into these levels. I'd still love a chance to buy gold around 2270. But if it doesn't, if it breaks out here, which would be good for all the gold bulls. If it breaks out here and then pauses and we go higher, awesome. Let's just keep the gold bull train running. But watch it closely. Just don't get suckered into a bull trap. Silver, I'd like to see, past resistance here hold. And if we can just break a trend line, start working our way back up to 30 plus, I'm looking for a longer silver. I like silver a lot. I'm trying to get bullish. I am bullish already. SLV, silver futures, but trying to hold on to this one towards like $35 or higher. Okay, so there you go. Corn short, man. It's up to you, man. Where's my corn futures at? It's Z something. Is it ZC? Yep. So corn futures, I mean, you're going to short this. I'm just going to wait for long. To me, chart alarm for me is down here. If I'm going to go anything on corn, it's like nothing. Short, sure, but you're playing with like borrowed direction. I think if anything, this stabilizes. Maybe you come down to 320. Come down to 320. I'm way more like longer term, at least like stabilizing in corn. So I don't know. I like corn long if it gets low enough. I'm just not going to do anything on it right now. Japanese yen, we just did it. We did the whole basket. We did all the Swiss, we did all the Japanese yen, we did all the dollar. I think my time is up. I think. So if you want some more, then check me out on YouTube, join my Discord channel, and come back tomorrow when I join A1 Trading. Okay. So if James isn't popping on to kick me off, I think I'll just kick myself off. We're good. So, all right, everybody, have a good rest of the day. We'll see you soon. Thanks. Bye.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partner broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right. Good day, traders. How are each and every single one of you? You good? Let me ask like this question. How many of you are like still long on the NASDAQ? How many people are looking for some shorts on the NASDAQ? Let me know. Because ultimately that is the only pair which I'm finding myself trading. To those who knows me, you would know that I'm a scalper, right? So I'm just looking for short-term trades when it comes down to this beautiful pair called the NASDAQ. How many of you are still long? How many of you are still short? So I'm basically going to start off from our DXY, right? I agree with Chris' analogy or his analysis, which he found himself making, right? But I will also just find myself sharing my thought processes when it comes down to the DXY as well as, the NASDAQ. And then if you guys have any questions whatsoever, feel free to ask. Okay. So starting off from the DXY, if I maybe can go on the monthly time frame, right, we can clearly see that we don't really have much price action happening over here, right? I will still consider us being quite range bound when it comes down to the DXY on our monthly time frame, right? But like I might mention, I'm a scalper. I want to see what can potentially happen in between right over here, right? So if we are going to look at market structure currently when it comes down to the DXY, we can clearly see that we find ourselves creating some beautiful higher highs right over there, right? But recently we find ourselves creating a lower high right over there, and even looking at the lows, we can see that we have this beautiful low, higher low, lower low right over there as well, right? So how I'm basically just looking at the market is that, we need to find ourselves moving with impulses and corrections, right? impulse correction, impulse correction, impulse correction, impulse correction, etc., right? The market just don't find itself moving with just one move to the upside or just simply one move back towards the downside, right? So with us basically creating this lower low, I am expecting some sort of an actual pushback towards the upside when it comes down to this beautiful pair called the DXY. And if we are going to look at the range which we have found ourselves creating, if I can just get out my Fibonacci from point A till point B like that, you know what, I just want to see the DXY at least come back into a premium area, which is basically lining up right over there, right? We can also see that we did find ourselves creating a beautiful order block with a move back towards the downside as well, right? B, bull, B, right over there, right? So find yourself boxing that out just like that, right? As this is basically serving as a point of interest to where we can potentially find ourselves heading back into, right? And also potentially find ourselves having some sort of an actual rejection for a potential shift back towards the downside. Okay, so if I can maybe just zoom price out just a little bit, right? And maybe go on the daily time frame, right? On the daily time frame, we can see more structure, right? And we can see that price did find itself tapping within a strong area of support, right? As we are currently still tapping within this area. So I would actually like to see some sort of a bounce from this area. Some sort of a bounce from this area, right? Because if we can simply see the DXY changing market structure on our lower time frame, right, this will be fueling the Nasdaq to find itself having that shift back towards the downside, right? So with the Nasdaq shifting towards the upside, we can see that it is going inverse correlated with what is happening on the DXY, right? We can see that we are having a beautiful shift back towards the downside, and that is fueling the Nasdaq having that shift back towards the upside as well, right? So scaling to the H4 time frame on the DXY, right? If I can maybe just look at what is finding itself happening within the strong area of support, right? Once again, just like I mentioned on the higher time frame, we can see that we did find ourselves creating a order block over here as well, right? So all I'm just simply going to find myself doing is box out this area just like that, right? So if we can basically see price come all the way back down, back into this area, have some sort of a rejection and have that shift back towards the upside, right? That would be clean, right? That would be clean because I am simply looking for some shorts when it comes down to the Nasdaq. Okay, I'm looking for some shorts when it comes down to the Nasdaq, so I will tap back into it once we get to the charts or once we get to the Nasdaq, right? So if we can see price have that actual pushback towards the upside, having a closure above this high, which we have found ourselves creating, you know what, that will basically be, or that will give me the confidence in saying that, you know what, we are changing market structure from this beautiful bear market back into a bull market, so we can see price have some sort of an actual shift back towards the upside, right? So that right there is my analysis when it comes down to the DXY. Does anyone have any questions when it comes down to the DXY? Does anyone have any questions whatsoever before I'm going to find myself scaling over to the Nasdaq and basically indicate why I would be looking for some shorts or potential shorts? Does anyone have any questions when it comes down to the DXY? And obviously, if we are going to find ourselves having a closure below, right, there is a high possibility for us then, you know, looking to take out these lows, which we have found ourselves creating right over there as well. You know what, that's just something that you need to take into consideration. But most importantly, you know what, price is not just going to find itself having one huge shift back towards the downside, right? We need to find ourselves creating some sort of a correction as well. All right. So yeah, that right there is my outlook when it comes down to the DXY, right? So let's scale over to the Nasdaq and see what is happening on the Nasdaq, right? So looking at the monthly time frame, we can clearly see in overall we are quite overly extended towards the upside, with us basically creating some beautiful high highs, right? We can see that we had a beautiful high to us then creating a beautiful higher high right over there. Now, looking at this candle, which we are currently finding ourselves forming, right, we still do have 17 days and 6 hours for this candle to close. There's still a lot that can find itself happening within this time period, right? But if we can find ourselves having some sort of a closure around about where we are currently with price, you know what, I am looking on taking price quite short, right? I'm looking on taking price quite short, and that will simply mean that there would be a high possibility for us to at least fill up this week, which we have found ourselves creating right over there, right? But keep in mind that we still do have 17 days and 6 hours for this candle to close, right? And just to look at what we find ourselves doing over the course of this month, we already had a 2,300 pip move towards the downside, right? As well as having a whole 1,600 pip towards the upside, right? So with that being said, we do have a whole lot of volatility inside the market. And you know what, with us basically having volatility, a lot can find itself happening within 16 days. All right. So if I can maybe go to my 2-week time frame, right now, the exact same thing as what I made mention earlier on the actual monthly time frame, right? If we are going to look at this candle right over here, I actually want to see the Nasdaq fill up this candle right over there, right? I actually want to see the Nasdaq fill up this week, right? 1,600 pip move back towards the downside. Now, how I'm basically looking at price is like the following, right? I do look at things such as, you know what, some fee value gaps. And as we can see with this momentum we find ourselves having towards the upside right over there, we can clearly see that, you know what, we did find ourselves creating a fee value gap right over there, right over there. Okay, so if I'm basically going to extend price a little bit like that, you know what, this is coming through as an inversion fair value gap in my eyes, right? So for me, Diego, I would actually like to see us hit all the way back up, back into this area, and potentially have that actual shift back towards the downside. Okay, and have that potential shift back towards the downside from this area. So this is basically serving as a point of interest for me to be looking for some beautiful, beautiful short opportunities, right? So if I can maybe go to my weekly time frame, right? On the weekly time frame, if I can maybe just zoom price in just a little bit, looking from previous price action, that we can see that price did find itself creating a beautiful swing high right over there. We can see that price created a swing high right over there as well, right? And price simply found itself slamming back towards the downside, right? And here we can clearly see that price did find itself creating a swing low over there as well, right? So with us basically taking out the swing low, this whole region is serving as an area of supply for me, right? So with us basically having a closure below our area of supply, right? Maybe if I can just find myself doing that for each and every single one of you. So with us basically having that closure below the area of supply, all I'm waiting for is a retest back into this region. And then we can see that we had a retest already and had a beautiful shift back towards the downside from that area onwards, right? But, big but, right? But, so with me basically pointing out that area of supply, right? An area of supply in my eyes is basically changing market structure from bullish to bearish, right? Now, even though we find ourselves having the retest back into the area already, I'm going to simply find myself grabbing my FIB from that high to the low. Just like that, right? From the high to the low. Okay, so we can clearly see that we had a shift back towards the downside, and currently I'm looking at this as my potential correction, right? A potential correction. So impulse, correction for the next potential impulsive move back towards the downside, right? That is basically what I have my eye out on when it comes down to the Nasdaq on the weekly time frame. Okay, on the weekly time frame. And we can also find ourselves grabbing out a beautiful trend line as well, right? From these lows, And we can see that we did have a beautiful first, second, and a third touch right over there. Now, you may be like, D, are we going to find ourselves having a closure below this actual trend line? I am not sure about that, right? I will just find myself monitoring price and see if we can find ourselves having a closure below this trend line, right? And if I would want to see a closure below this trend line, it has to be on the weekly time frame, right? I have to see a weekly closure below this trend line to be like, you know what, we can potentially see price have a further continuation move back towards the downside, potentially back into, you know what, this region right over here, right? Which is basically coming through as a monthly correction, right? Or just simply a monthly area of support, which is lining up within that area. Okay. So yeah, you know, I would like to see some shorts finding itself still, you know what, opening up on this beautiful pair called the Nasdaq. I can already hear some people almost probably like, no, no, you know, we're just gonna find ourselves having a shift to the upside. But you know what, it's perfectly fine. This is just simply what I have my eye out on. Okay, this is just what I have my eye out on. All right, so looking at what we currently do have with PA, right? And the reasoning to why I would like to see us actually have some sort of a pushback towards the downside is simply because of these lows right over here, right? So we find ourselves creating some relatively equal lows right over there. And with us basically creating some relatively equal lows, you know what, to me, we do have liquidity resting below this area right over there, right? So with us basically having liquidity resting below, I want to see price at least take out this area right over here. All right. So yeah, that would basically be the main reasoning to why I would like to see us come all the way back down, you know what, back into these lows which we have found ourselves creating right there. And with current PA, right, with current price, we can see that we had a beautiful shift to the upside throughout last week, right, and today as well. Now, if I can just simply look at market structure once again, because ultimately all I'm doing is following market structure. All right, so we can see that we had that higher high right over there, and then we find ourselves creating a swing high right over there. So I will consider that as being my lower high, right? And then this as my lower high as well. So clearly we are bearish in market structure when it comes down to this beautiful pair called the Nasdaq, right? And if I can get my fib out from this high, well, from that high to the low, which we find ourselves creating right over there, we can clearly see that we are finding ourselves tapping within a premium area, right? So with us basically tapping within a premium area, this is simply me preparing for some beautiful shorts to find itself opening up, right? This is me simply preparing for some beautiful shorts to find itself opening up. And my first point of interest is basically from this region right over here, right? So this was a previous order block which we have found ourselves creating, right? And this basically came through 6 June 2024, right? So if we can basically see price come all the way back up, back into this area over here, you know what, I will just simply wait for price to have some sort of a change in market structure on my actual lower time frame to be looking for some beautiful short opportunities, right? Scaling to the H4 time frame, let's see what's happening over here. Scaling to the H4 time frame, you know what, over here, what I have boxed out is simply this huge fair value gap we find ourselves creating right over there, right? And this fair value gap will be serving as my quote unquote area of resistance, right? my area of resistance. So if we can see price have some sort of a push back into this area, you know what, when I refer to a lower time frame, I'm basically referring to my 1 hourly time frame and my 15-minute time frame, right? If I can see a clear market structure shift, you know what, then I will participate with some beautiful shorts. All right, and looking at overall PA from what we have found ourselves creating right over there, we can clearly see that, you know what, we find ourselves having a beautiful swing low right over there, swing low right over there as well. So if I maybe can just trace up the charts like that, this will basically be my sell side liquidity, which we find ourselves forming, right? And looking at this push towards the upside, which we have found ourselves forming right over there, this will basically be my buy side liquidity. Okay, my buy side liquidity. So the moment we basically had a closure above this candle right over there, this is when we changed market structure, right? This is when we changed market structure from this bear market back into a bull market. Okay, so with us being currently bullish in structure, all I will just simply find myself doing is just holding or just keeping my foot on my charts, right? So wherever we're going to see price have some sort of an actual rejection, right, this is basically where I will monitor price and wanting to see price have some sort of an actual shift back to the downside, right? So if we can have that further push back up, I'll just simply find myself monitoring price as it is, like wherever price will find itself rejecting from, right? So an area or a point of interest to where I would like to see this thing find itself having a shift back towards the downside back into will then just simply be back into a discounted area, right? And the discounted area is finding itself coming through, you know what, right between our actual 100% and our 50% as we have it right over here, right? So currently we can still see that we are having that shift towards the upside, right? And like I made mention on the DXY, I would like to see the DXY first having some sort of an actual rejection towards the upside, right, before I will find myself participating with some shorts on this beautiful pair called the NASDAQ. Does anyone have any questions when it comes down to my analysis or my breakdown on this beautiful pair called the NASDAQ? Does anyone have any questions whatsoever? Does anyone have any questions whatsoever? Or you all have a clear understanding? You all good? You all good? Looks like we do have a little bit of a delayed. Looks like we have a little bit of a delayed. Right. So yeah, you know, that right there is my outlook when it comes down to this beautiful pair called the NASDAQ. And like I made mention, you know what, the NASDAQ is the only pair which I'm finding myself trading, right? So I'll be patient and I will wait for price to present my actual shorts. Okay, and that right there is literally it from me. Thank you to all the guests who found themselves sharing their valuable knowledge, right? And thank you to the chat as well. You know what? I hope you guys have found yourself taking away something from each and every single one of us. And till next time, I'm going to see y'all. Similar.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.